Hello all, welcome back to my channel. So please like, subscribe, and also press the bell icon so that you will get a notification for my next videos. So this is also, today's video is about HDFC First Bank. So there is one saying from Warren Buffett, you have to be greedy when others are fearful. You have to be fearful when others are greedy. So if you remember, ITC was trading at 160 to 170 level when in 2020. So everybody were making fun of it, and then from there it has bounced back and it has given almost a returns of 120 to 150%. Now it is trading at 440. So this HDFC bank is also it is the same story which is happening now. So I don't know. Sometimes some markets will not get attention, so maybe because of that there was a merger between HDFC Limited and HDFC Bank. That's also one reason, thinking that okay, this bank has become too much big and it cannot grow further like that. I think if I remember a case of Apple, when Mr. Warren Buffett invested, so it was already so much big that time, but still he invested. From that time it has already become 4 to 5 bagger. If you see the Apple market cap, it is too much. You cannot say just by looking at the market cap whether it is too much, and you cannot you know it cannot grow like that. So this case I will give you today reasons why it can minimum give you 50%, 50 to 60% returns in 1 or 2 years time. So one thing is, in the share market, making money is easy if you leave your greediness. So you should keep an expectation of 15 to 20%, and then you should try to find a stock. If you have that kind of 15 to 20% per year, then you are already ahead of other people. So if you want to find a multi-bagger, so that's when the problem comes up. You will not look at the fundamental analysis and other things, and you may buy the wrong stock, then it may go in a wrong direction. But anyway, let's come back here. Now why I am saying, I'll give you the reasons why this one is a definite buy now. So we can see here the stock P is currently 15. Let me quickly show you the historical PE ratio where it was trading. You know, you can see here the price to the EPS currently is keep on growing. So the current EPS is 89. As you can see in the top, EPS is 89. So look at the historical PE ratio where it was trading. It is almost like 31, 28, like that. Even here you can also see it is minimum 26 is the average. Okay, this is the median. Here 26 is the kind of historical P ratio where it was trading. Why now this is coming down? There are multiple reasons. As I said, one is the merger ratio, and other thing, other people are also selling. They may be trying to, and also bull market, right? Each and every small companies will be running, and people will be ignoring these kind of multipliers. They will be multiplying over a period of time. That kind of things, they think okay, they will give less returns like that. You can see the graph here. From last 10 years, it's always going up and up. So to come back again, so if I see now the 89, so the median ratio is actually it is currently 25, let's say 25 into, if you give for example 90 is the current uh, earnings per share per year. So the price should be, minimum should be 2250. I'm just saying, it's median, medium P level. If it start trading high, then it can also go up. So current price is actually 1421. So if you calculate the returns, 1421 into, for example, I'll say 60% plus 1421, if I add, so it's coming to 22573. That means it is going to give you 60% returns, definitely, in 1 or 2 years time. Only thing is you should have patience. And also in bull market, it is always better to either come into cash or get into the blue chips, and also which have not given many much returns. You can see here, this is also at 52-week low price, and this is also not given any much returns in a couple of years time. As you can see here, it is consolidating from 2020. This is definitely no brainer. You can call me, I mean, you can message me after 1 year, 2 years time, if it is not going to 2050. Definitely it will go. So why, I will tell you the reason as well. I'm just going getting into the uh, website, this presentation from HDFC Bank. One reason what I'm giving is, so the number of branches you can see here. Current number of branches is 8,091, and you can see from last from 2019 onwards how much they've increased. 1,000 branches they opened. So this is not a small number. If you just to give an example, like if you see City Union Bank or South Indian Bank or IDFC Bank, they're all only having only 700 branches. This here we have a bank which is opening 1,000 branches just like in 1 year itself. It's like that. It's a big bank. It's all about, ultimately it'll come to granular level. If there is a branch, that branch manager will have a target, to get the business, and how much business is going to bring. Based on that, each branch will also have that responsibility. In terms of business, it doesn't look at the market. Oh, I'm grown this much, I don't want to, uh, increase the price or something like that. It doesn't work that way. Business runs in a separate way and share price runs in a different way. So business, if you see business here, they open branches means they will all even break even, and then they will start giving the profit. The deposits will be there. There are employees, they will contact customers. Still, so many banks in India, public sector banks are painful. If you go to SBI, if it is lunchtime is over, they will send you out. So many issues are there. That's why always, private banks will always have got the advantage over public sector bank. That's why, I mean, they opened it. This is just to give, 1,000 branches they opened between 2019 and this is quarter three, between November 2023. These many branches. So I'll show you the next one. I know surprising thing you can see here. So they're going to open another 1,000 branches in 2024 itself, and they will take the number of branches to 13,000 in 3 to 5 years time. You can ask me whether it is actually useful or not to get into branch, because most of the things are happening digitally nowadays. But still, Indian population is so big, and also people, mid age people and all, they would prefer to go to branch. That's why it will always help. And also, if you would have visited the branch, always they will be busy. They will be driving the customers, as well as they will try to, as well as get the deposit, as well as they can also do cross selling kind of thing. That's why this will always helps to open the branches. So you can think of 13,000 means it's too much. Let me quickly go through the, how it is growing the revenue and other things. You can see here, this is quarter to quarter. In March 2023 quarter, the revenue was 47,000. Now you can see it's almost kind of double. If this revenue doubles, then of course this profit also doubles. You can see 16,000, now it is 21,000. And from December March 2020 20 onwards, and if you compare now, the revenue or the sales is doubled, almost doubled. You can see, and even the profit, you can see. It was just 22,000 crores, and now it has become, almost like, 3 times. So the share price is still staying there. Another good thing is also they're paying dividend of 23%. That means you will get 2 to 5% dividend easily. You will get it, and it is, you can see the profit here, and even the share price also 15%. It is given continuously plus dividend, uh, and even the sales growth. They're growing at 17%. So as I said, I already given you the proof here. They're going to have a branches of 13,000, and definitely this will, kind of a no-brainer for me. So if you are looking of a safe bet plus looking for a 50% returns, just let me quickly show you one of the, recommendation given, which came few days back. As you can see, this came on, there's a date, yeah, here, February 20th. This is 5 days back. So actually, uh, City Bank, which is actually kind of, one of the global this analyst. So they've given a, target of 2050. Whatever I said, it is almost similar to that. And apart from that, also, even if you go to, this trend line and look, everything is, almost at 2000 level, 1950, 37%, 39%, 40%, like that. So it's kind of no brainer for me. It will definitely give you at least 60% returns in 1 to 2 years time. Uh, yeah, I think even you can see here, the DIIs keep on increasing it. It was 26%. September quarter they brought it to 30%, and here also they increased it. Even FIS also kind of increased. So only our public sector, public persons are actually selling it. So just let's quickly check what is the activities of DIIs. So you can see life insurance also entered, life insurance company, LIC. And even you can see here HDFC Trust also, they keep on increasing every quarter. It is 1.6 or something. Now it has become 2.17. Of course, there are also selling some of them, but it is okay. I think they have reshuffled to other mutual fund. Maybe that's why. Balanced Advantage Fund, they picked up 1.7% stake, 7 stake. Even you can see UTI also picked up, and you can see here NPS Trust and Nippon, all these things, all these two companies, recently they picked up. So I hope this video helped you. So even if you compare, price to book value as well, that is also actually historically it is down. So this is when the time when you ought to buy it. So this is safe, but how much money you have, we can put it safely. It will not, the downside is limited, and it is safe. Even the market falls down tomorrow, then also this will go up because it is downturn. Even the correction will not happen much. For me, it is kind of a safe bet as of now. If you're looking for a safe bet in this highly overrated market, so this is kind of a value buy for me. Yeah, I hope this video helped you to take a decision. Thank you so much. Bye.